A rough day to finish the week here. So is this pullback a change in character for the market or just something for investors to move on from? And Ernesto Ramos is the portfolio manager for BMO's large cap value fund, and he joins us now to discuss. So certainly not a great couple of days here to finish the week. But when you look at the action you've seen, just kind of high level here, does it change your view on the health of this market, at least as it pertains to what we've seen in the U.S. stock market so far this year?
Well, the U.S. stock market has been so incredibly resilient for so long, and it's been pretty much in a steady upward trajectory. And it seems that in the last couple of days, it's finally figured out that there are some risks, in particular related to the coronavirus, which really nobody has a good way of measuring because we don't know when this will abate, that are embedded in the market. And it's taken it out on the most expensive part of the market, which, as it turns out, has been the growth sector. If you look at the valuation of growth stocks in general, they're trading at about 25 times next year's earnings, whereas value stocks, which is much more attractively valued at 16 times. And so when you have down days like this, you see growth stocks taking a much bigger hit than value stocks. So we're still positive on the market as a whole because the earnings that are forecasted to come in for the market for next year are still coming in, according to the consensus of analysts, pretty strong. But that has to be tempered with the realization that there's going to be some period of weakness related to the coronavirus that we really, and nobody we think really has a good way of getting their heads around how much of an impact it will have, because it will depend on how long it takes. And unfortunately, nobody really knows that so far.
Right.
So it's really take stock and be careful here, because until we get more clarity on the impact of the coronavirus, it's going to be a tough market to put money aggressively to work in.
So I guess, how careful do you have to be here? It seems like there are some value names, there are some stocks that you see as cheap and good to get into, but you just sit on the sidelines until coronavirus is clear? I mean, that could be months.
Well, so you do your work and you find stocks that are relatively more isolated from the coronavirus effects. So, for example, one of the holdings that is in our portfolio is Allstate. Allstate is, as you know, is an insurance company, and most of its exposure is to the U.S. market and to automobile insurance, and a little bit in terms of device insurance and cybersecurity. But this is a stock that's really doesn't have a supply chain issue. Its customers are relatively not exposed to the coronavirus. So this is somewhat of a safe stock in terms of impact from coronavirus. On the other hand, the technology sector as a whole is in a much more perilous situation, because they have a lot of supply chain goes through China, no question about it. And Apple already came out and talked about that. Analysts, funnily enough, as you were mentioning earlier, haven't really been factoring in that potential impact to a large degree. So we think you want to be cautious, especially because of the high valuations, how you put money to work in the high value sectors as opposed to the cheaper sectors and stocks in the market. And our approach would really focus on, let's take the fundamentals of a company, let's see how much they're worth, let's see how much they're trading at, and let's make sure we do not overpay, is where how you want to invest.
Ernesto, I have not been a fan of this market action this week at all, especially the past two sessions. Is there anything you're seeing in the markets in certain asset classes, or when you talk to clients, that we might see a major sell-off, let's say over the next 2 weeks?
Well, if I could figure out major sell-offs and major rallies ahead of time, I would be the richest guy on Wall Street. But certainly the volatility index is trending much higher today, of course, as you see the sell-off. We had such a vertical market for so long that I wouldn't be surprised if you get a pullback here. Hard to predict the magnitude, but maybe a 5% to 7% pullback isn't out of the question. And then that actually would be healthy, because it would reflect a market being aware of risks that it hadn't really been aware of and had been largely ignoring. But more than that, keep your eye on the 10-year Treasury yield, because we think that that's one way to figure out what the potential impact coronavirus is as that yield goes down, that really makes you take pause about the potential impact to the economy. So, but we still think you want to be buying stocks opportunistically and on the basis of not overpaying for their fundamentals.
And, Ernesto, you mentioned the bond market there. Does anything, have you changed your view on what you think the Fed might do this year? Because there's been a sense the Fed is a friend to the market, but perhaps would remain on the sidelines this year. Does the action in Treasuries start to suggest to you they may be forced to cut once or twice in 2020?
Well, the market has certainly priced in one cut, and it's starting to price in potentially a second cut. So I think that the bias right now of the Fed with the coronavirus will have to be towards cutting versus staying the course here. So I think we will get some help from the Fed. But remember, that's just on the short end of the curve. The long end is the one that's responding to economic conditions. And until that starts to pick up in terms of yield, we will not know that we're in the clear for the economic outlook and the impact of the coronavirus on earnings, which is at the end of the day what drives the markets.
All right, Ernesto Ramos with BMO. Thanks so much for the time. Have a great weekend.
You're very welcome.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.